Break out the party hats. We hit 30,000 on the Dow Jones Industrial Average for the very first time ever. In fact, we're up about triple in just the last 10 years with the Dow Jones. And the party didn't stop there. We also hit all-time highs on the Russell 2000, so small caps keep on rolling higher as well. We'll see what all that means for our posture. Then we'll tackle a little bit of sector rotation where we're seeing quite an impressive move in a once forgotten about sector. And then lastly, we'll take a peek at a new trade application example that could benefit with the upcoming rollout of the coronavirus vaccine. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 24th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, and then check out our description area where you can sign up for our email distribution list. Additionally, we're heavy users of Twitter. My handle is @BrandonVanZ. Feel free to follow me there, and we really appreciate those of you that support us by clicking like or retweet on our Market Outlook related tweets. And then last but not least, we also have a presence on Facebook. Feel free to join our group at that address you see in the logo in front of you. All right, so let's go ahead and jump into our charts here today. And as you can see, I've got chart 6D pulled up here in front of us. I usually start with this particular chart if we had at least a 1% move up or down. Today happens to be one of those up move days. As you can see here, S&P 500 did close higher by 1.62%, so a fairly impressive showing. Some of that is perhaps renewed enthusiasm about Janet Yellen maybe becoming the next Treasury Secretary. Perhaps it's just jovial spirits during a holiday season. A lot of times you do find a little bit more bullishness during the Thanksgiving week. And then, of course, we're still kind of benefiting from the positive vaccine news that we've been receiving for the last 3 weeks. So lots of different things going on there. But for the most part, markets continue to be bullish. You can see what today's green candle looks like on this particular chart, where we're up and over that blue line there, signifying at least a 1% positive session. The last time we had that was actually just back here on November 16th. We had it on both November 13th and 16th, so that must have been a Friday, Monday, but back-to-back sessions that we were up over 1%. And then we did have one down 1% day along the way as well. But for the most part, notice the collection of these green bars that have really been showing up here pretty much ever since the election time period. It has been a very, very strong month here that we're witnessing in the month of November, and it has pushed us from basically this level here at the end of October, which was pretty much the bottom of that kind of miniature down move right there, but we went from the bottom all the way to pretty much a new high. Now remember, this is the S&P 500, so we're not quite to that high that we hit there on November 9th on an intraday basis. But on a closing basis, we've already achieved that. And as I mentioned before, the Dow Jones and the Russell 2000 actually are at their all-time highs at this point. So it's been a really furious rally, just the way that the calendar shook out. The end of October was pretty much the lows in the most recent move, and we've had pretty much nothing but straight up price action in the month of November. And some sectors are really benefiting even more than others, and we'll get into that conversation here after a little bit. Before we do, let's take a peek here at our Market Watch tab and look at the visualize area here. This will show us how many stocks within the S&P 500 were up versus down today to give us a sense of whether we had strong market breadth or not. And today was one of those strong days. You'll notice that out of the 500 stocks or companies on the S&P 500, we had about 400 of them hitting, or not hitting, but rising today or finishing in the green. So that leaves just under 100 that were in the red. So very strong price action there, over 80% of market components finishing in the green. So that's a strong advance. And like I mentioned on Twitter today, for those of you that follow me, with both the Russell 2000 small caps and the Dow Jones Industrial Average mega caps both hitting all-time highs, we do see a broad amount of participation across a wide swath of stocks. Remember, for the longest time, we were talking about how this was a market that was being led by just a handful of mega cap tech names. That is no longer the case. We are seeing the armies marching forward with lots and lots of participation. Let's go ahead and take a look here at our more traditional charts now and look at chart 4B. This will give us a sense of what's happening with the four major U.S. equity indices. And as you can see here, we did have bullishness across the board today. S&P 500, as mentioned before, was up 1.6%. The Dow Jones was up 1.5%. The NASDAQ Composite was up 1.3%. And then Russell 2000 was up 1.9%. So once again, this was a day where the NASDAQ was actually the laggard. Remember, that had not been the case more times than not throughout 2020. But here in the last month or so, as we've been receiving vaccine news, it does seem like there's been a bit of a baton pass that's taken place where the once high-flying software and cloud computing and work-from-home stocks have taken a little bit of a back seat to some of those more cyclically sensitive areas and more of your reopening plays, a lot of the travel stocks or oil and gas stocks or banks, many of them rallying furiously here in the last 3 weeks or so. In fact, we've spent a good amount of time in my dividend growth investing class that I hold for Premium and Plus members here today talking about the wild reversal of fortune that we've experienced in that particular account in just the last month. We were going from woefully underperforming to now easily outperforming, and a lot of it is as a result of the market's attitude change towards the once down and out types of stocks that are out there. So you just never know when something like that will start reversing course, but it is something that has been front and center for us here for the last 3 weeks or so. Anyway, with the NASDAQ underperforming on a relative basis, it's equally noteworthy that the Russell 2000 continues to outperform. And that's not anything new. Remember, I've been bringing that up. I'm sure David has as well for the last several weeks, as on my factor selector graphic, we saw the low size factor starting to work its way higher. And 3 weeks ago, it showed up at the top of the rankings. Remember, I'll have that factor selector class again tomorrow with our newest update, but I don't anticipate any change at the top. I fully expect that we'll continue to see the low size factor as the leading category. But what's somewhat noteworthy about the move that we've had here is the Russell 2000 was a little bit different than the other three indices, where the Russell 2000 was still grappling with a all-time high that occurred 2 or 3 years ago. And it wasn't until just this month of November where we finally went up and over that prior high from a few years ago. The other indices had already achieved that. So it's very interesting to find that while in recent years the Russell 2000 has lagged, they've actually taken on the leadership role for pretty much the entire month of November and is the place where the hot money is flocking to at this moment in time. Now, before we leave this setup, a reminder that we do have strongly bullish posture on all four of our charts. That's easily identifiable by seeing the dark green background color behind the current candles of all four of our charts, but it is noteworthy that we also have what's known as overbought cluster signals on 2 of our charts. Those 2 charts are the S&P 500 and the Dow Jones Industrial Average. So remember, when we have those overbought cluster signals, it's basically signifying that we have 3 of our market forecast lines in the upper reversal zone on the same day. So the green, the blue, and the red all closed above 80 here today. So you'll see that our Think script allows for those little dots to show up when we get those clusters. A reminder that any of you that are premium members of Market Scholars have access to all 50 of the customized charts that David and I use, including this Think script that allows you to see the clusters. And remember, right now we're offering a Black Friday sale for those of you that are new subscribers to Market Scholars, so make sure you're checking that out as well. But anyway, with this script, it allows us to easily not only identify do we have a cluster now, but have we had clusters in the past, and if so, have they been effective? And so to answer that question, one thing I can easily do is just take a look at what was the last time we had a red dot. Well, on this chart here on the S&P 500, you'll see that the last time we had an overbought cluster signal was on September 2nd. And it was immediately after that candle that we basically had a, not a meltdown, but certainly a sell-off, right? That was effectively the highest candle it achieved up until we finally surpassed it once again here in early November. So in other words, you basically had a signal that led to a topping out of the stock market for 2 full months after that signal existed. Now, does it work out that way every time? Of course not. There is nothing in technical analysis that works 100% of the time. So we do our best with the information we have on the board. And in this particular case, I think one of the benefits of where we're at right now with the S&P 500 as opposed to what we were looking at back then is we are now just barely crossing up and over a key resistance area. Notice that back here, I know it's kind of hard to see because this is just a trailing 3-month chart here, but we were consistently going higher day after day after day after day after day until eventually led to that signal right there. So it does make this one a little bit different. Yes, the markets have been consistently higher this month, but the consistent move has happened a little bit more so in the small caps down below. The S&P 500 has had kind of a more of an up and down type of a movement there because it has a bit more of that mega cap tech status within it that hasn't been rallying as strongly here recently. So it's entirely possible that despite the fact that we have this overbought cluster signal here, it's possible we still work our way higher as we head into a seasonally strong part of the year. It doesn't necessarily have to, declare that this move is over the way that it did back here in September. And the same thing can be said with the Dow Jones. In fact, you had the overbought cluster happen on the exact same day back then on September 2nd, and you're also getting it today here. It's kind of hard to see the red dot here because it's being covered up by that high label there that's talking about Dow 30,000, but you can also see the corresponding red dot down below here in the indicator itself. So don't want to ruin the party or anything like that, but naturally we just wanted to have a clear head about how we look at these things. And despite today being a very exciting day where we can talk about Dow 30,000, it is possible that with those overbought cluster signals, things start slowing down a little bit, although I don't anticipate any sort of a disastrous sell-off. It's just maybe we've gotten a little bit too far ahead of ourselves and we need to kind of work off the fat, so to speak. All right, let's go ahead and take a look at another chart now. Let's look at our 3 green arrows chart. And this will be chart 4D. As a reminder, on this particular chart setup, if the background colors of the charts are currently green, it means we have 3 green arrows. If they're currently pink, we have 3 red arrows. And if the background color is white, then there's a mix of green and red arrows. And as of this exact moment in time, we actually do have 3 green arrows across the board. That is somewhat new and timely information because yesterday we could not have made that claim. Yesterday we actually had a red arrow creep in there on the S&P 500's MACD histogram as we had a little bit of a loss of momentum there. But with today being such a strong rally, again a 1.6% move to the upside, it was enough to reverse that arrow back to green, and that's why you see the background color now plotting that green background as opposed to the white that you were seeing yesterday. So that's kind of a renewed 3 green arrow status there, which kind of brings it back into the same situation as we see with the other charts. Remember, the other charts we've had 3 green arrows for quite some time. In fact, the Russell 2000, we've had 3 green arrows since November 5th, and with the Dow Jones Industrial Average, it was also November 5th. So for those 2 areas, which today hit all-time highs, they've actually been on their 3 green arrows buy signal since the first week of November and are continuing to show that strength here. So in other words, these are relatively good trend trading environments that we're in right now. And remember, if you're a premium or a plus member of Market Scholars, I teach a trend trading class based upon the 3 green arrows philosophy every Monday. We've had a tremendous amount of success in that class this year. We've stalled out a little bit here this month as a lot of those work from home stocks have kind of stalled out. But considering all the gains we've made up until this last month, we're certainly thankful this Thanksgiving for having encountered a trend trading system like that. So if you need to sharpen your skills around that particular strategy, now would be a great time to be joining me for my Monday top-down trend trading class. All right, let's go ahead and now take a look here at some, actually let's pop over to the internet real briefly, and then we'll look at some 12 grid analysis. I always like to take an opportunity to say thank you to those of you that help support David and I on social media with this YouTube offering here. Remember, we don't make money off of this YouTube video itself, but we do hope to promote our services by offering it to you for free. So if you want us to continue to do the video each and every day, the best way that you can thank us for that is by clicking like for us on Twitter. And 106 of you did that for me the last time around. I really appreciate that. I'm always shooting for triple digits, so to get us up and over 100, that means a lot to me. Thank you for your support. David and I know that we have the pleasure to work with a really, really supportive group of investors and traders out there, and we want to thank you, particularly this time of year with Thanksgiving. So we appreciate that. Please keep it up. If you get value out of these videos, please click like for both David and I's videos there along the way. Also, what I had mentioned previously, be aware that if you're somebody who's considering our premium services, we are having a fairly rare discounted sale at this moment in time. We don't offer sales very often here. So it's usually Black Friday, and that's pretty much it. So since we are now in the week of Black Friday, if you've been thinking about joining and signing up with our services, now is the time to do it. You can see our red flag up here at the top of our website that's talking about getting 20% off of your premium subscription, which of course would entitle you to not only all of those 50 customized charts, including all the cluster signals and all that kind of stuff, but also entitles you to the 10 premium classes that we teach each week, including a question and answer session with both David and I. And we also give you trade alerts. So if you want to be up to date with the most recent trade information from all of our premium classes and from these market outlook presentations, we offer a trade alert service there for our premium members as well. So anyway, we try not to hit you with that stuff too often, so you'll have to forgive us when we do. But naturally, we are a business just like any other, and so we need to have that support every so often. And so here's our request to you to check out that information if you're interested in signing up. Anyway, also wanted to bring up our sector selector this week. Now I'm going to show you this real briefly here, but this is as of last week, right, on Friday's close. We didn't see a whole lot of change here at the top, but I also want to show you what's been going on more recently. On this particular Think script here, which I'm still polishing up and will be ready for our premium members by the end of this year, and you guys will all have this in your hands at that time for premium membership as well. But one of the new enhancements to this is it's kind of given us a heads up in the middle of the reporting period which direction the sector rotation is heading. And we are seeing an absolutely violent move taking place right now with energy stocks. Many of you are probably recognizing that. We had that conversation today in my dividend growth investing class, how some of those oil and gas stocks that were once left for dead have absolutely erupted in the last month, some of them up like 20, 30, 40%. And we're seeing that pretty much across the entire oil and gas sector. So notice the major movement that energy is having here in between reporting periods. They're making their way up here into the fourth slot at this moment in time, and they were just dead last here a week or so ago. So there is major movement taking place with oil and gas stocks at this moment in time. Whether it's a permanent rotation or not remains to be seen. We have seen these types of dead cat bounces out of oil and gas stocks in the past, and they've usually been opportunities to sell, not not to buy. Then again, there's been a lot of destruction that's been done in oil and gas. There's been a lot of companies that have gone bankrupt. So it's possible that with less supply in terms of companies pumping oil and gas out of the ground, maybe the additional demand from stock buyers who think that we'll all be back in our vehicles and burning up gasoline here sooner than later with the vaccine news, maybe there's a moment in time right here where oil and gas can take a positive turn. So we'll keep our eyes on that, but I thought I would point that out here tonight because it is a really big and violent move. You usually do not see a sector move this aggressively, this quickly. Usually they're going to make maybe a 1 or 2 ranking movement. This is a big jump higher for oil and gas stocks. But up at the top, we still have materials and industrials and discretionary leading the way. Let's go ahead and take a look now at our 12 grid analysis with those sectors as well. And I wanted to point out how this looks on a slightly different vantage point if you're looking at XLE as your proxy for what's going on with oil and gas stocks. Now remember, this is the market cap weighted version, so this would be kind of more heavily influenced by stocks like Exxon and Chevron. Nonetheless, it gives us a good proxy as to what is happening in oil and gas land, and you do not see this very often. In fact, I'm pretty sure I heard on CNBC earlier today that this is the best month in the history of oil and gas stocks. We're talking about like, a game-changing type of a month, and you can see why. Just a month ago, going into the end of October, oil and gas stocks were stuck in this really nasty downtrend. At one point, they were down 25% in just a few months. That all completely unwound, and then some, in just this last month. Again, a lot of that is driven by the vaccine news that we've had for 3 straight Mondays, right? 3 weeks ago it was Pfizer, 2 weeks ago it was Moderna, and then this week it was AstraZeneca. So we've been fortunate to wake up to that news, and I, for one, am especially thankful for that. My grandma, unfortunately, actually has COVID-19 right now in a nursing home, so I'm worried about her, and these vaccines can't come out fast enough, as far as I'm concerned, in order to help our society along. But anyway, that vaccine news has kind of made an impact on the financial markets and what participants are interested in. And one of the benefits there is that if we start kind of unfreezing our economy and get back to a normal life again with the vaccine hopes, that oil and gas is going to start getting used a lot more, whether it's for jet fuel purposes of people flying around a lot more than they have in the last year, or just simply gasoline in terms of driving back and forth to work if they hadn't been doing that for the last year. So there's maybe some enthusiasm around how much oil and gas we'll be using here if we get a vaccine. And then there's also the possibility of, we're likely to have a new president in the Oval Office here for the next 4 years. And I brought this up in a presentation with you guys maybe about a month or so ago, but there was this thought floating around before the election that if the Democrats fared well in the election, that perhaps that could trigger a positive response from oil and gas, with the thought that generally speaking, not always, obviously there's a lot that goes into this, but generally speaking, Democrats might be a little bit more strict with their environmental regulations. And if that's the case, there might actually end up being less drilling, and therefore there would be less supply of oil and gas. And so there might be a little bit of that working its way into the price action as well. But definitely wanted to point that out because this is kind of a once in a lifetime type of a move that we are witnessing right here before our eyes in oil and gas in the month of November. It's been really incredible. As you can see, we've had some really strong performers across the board. Energy was the best today. It was up 5%. But there were some other monstrous moves out there as well. Notice materials was up 2.5%. That's been an area that we've been buying lots of stocks in my top-down trend trading class here recently. We also saw a really big move out of financials. They were up 3.5% today. I mean, we're seeing those big banks just erupt higher. Part of the reason behind that could be this idea that Janet Yellen would be maybe a more satisfactory Treasury Secretary than somebody like Elizabeth Warren, who might be a little bit more strict with the banks. So I think the banks are feeling a little bit more love after finding out that information about Janet Yellen here within the last 24 hours. You also saw a big move out of communications. They were up 2% here today as well. And that pretty much says it for the big moves. In terms of who was down today, it was actually real estate was the only one, and just barely. You can call that flat. It was down 0.05%. And speaking of real estate, that was actually our focus area in my dividend growth investing class today. So if you wanted to hear my analysis on two REITs that are very, very different from one another and understand some of the philosophies behind evaluating REITs and some of the differences, including how to think about things like funds from operations per share as opposed to earnings per share, make sure you check out that recording of my dividend growth investing class that I held today. That recording is already available on our calendar if you want to check that out if you're a premium or a plus member. All right, so with that information out of the way, let's get into the trade application example here now. And I'm just going to pull up chart 3A for this. This is going to be a little bit of a different trade idea here today. First of all, be aware it is a very small company, so it can be more easily manipulated. You just have to be careful around that. Hang on just a second. There it is. The ticker symbol is CYRX. Now remember, I already have placed this trade, and I've already sent out the notifications to all of you that are premium members of Market Scholars via Telegram. Remember, that's one of the key benefits of being a premium member is that you receive pretty much instantaneous notifications whenever David and I are placing trades based off our different strategies from our premium and plus classes in addition to these market outlook videos. So this trade's already been done, but let's kind of talk through why it might be interesting. One thing I will say is that it did sell off at the end of the day. And so it doesn't look quite as appetizing right now as when I placed the trade earlier in the day. Earlier in the day, this stock was above its moving average, and it was kind of looking like it wanted to break out to my eye. Now, it's still considered bullish from a swing trading perspective, which was the style of trading that I did for this application example here. When I say it's bullish for swing trading purposes, what I'm referencing is that the blue line on the market forecast is in a bullish position right now. It's also called the near-term line, and you can see it's at 58 and rising right now. So that would be considered a bullish near-term posture there. And earlier today, before that late day sell-off that this particular stock had, it was actually trading above its moving average. So that was going to be part of my thesis there as well, but it's possible the market has other ideas on this one as it ended up selling it off. So that was maybe not quite as an encouraging sign to end the day, that it was not able to close above its moving average, even though it was trading above it on an intraday basis earlier in the session. Nonetheless, we still have that bullish near-term posture. And this one is a really interesting story as well. I mentioned in the intro here in the video that this is a bit of a play on the vaccine distribution and deployment that we expect to see going forward. Now, just because it's a play doesn't mean that you're going to be successful with trading it, right? There is that understanding that even if this company is involved in the distribution of the vaccine, it doesn't guarantee that stock traders will do well with it. It's possible it's already baked into the cake. You can see with our labels up here, this stock is up 205% over the last year. So it has already been a giant winner. But this particular company is not a very well-known one, but has a very specific role in what is expected to be the deployment of a lot of these vaccines. Many of you that have been reading the news know that these vaccines traditionally need to be kept at an extremely cold temperature. In some cases, as low as minus 90 degrees Fahrenheit. So we're talking extremely, extremely cold, freezing status there. And there's not a whole lot of companies that have experience with dealing with temperatures that low, particularly when the product needs to be shipped. And this particular company has already been doing it. This is part of what they do. Now, obviously, this is a grand scale when we're talking about the vaccines that need to be distributed throughout not only the United States, but really all over the world. So the challenge is certainly much larger in this case. But with this small company here, they already have that background knowledge about how to deliver medicines and vaccines to hospitals and clinics and other healthcare institutions around the country at extremely low temperatures, and to do it without contaminating the drugs and the medicines and things like that. So this is a stock that could potentially get a little bit more buzz in coming months as we move towards that potential vaccine deployment here in the United States. So the way that I chose to play it in this case was directly through the stock world. Remember, we don't always do options trades during these videos. More times than not we do, because we can control the options trades a little bit better. But with this being a small cap company, the liquidity within the options world is not all that great. So instead I just did a normal buy of 100 shares in paper money of this particular security, with the hopes that this new near-term bullish posture, will lead us to a move back up towards where this was trading a couple of weeks ago. You can see here back on November 12th and November 13th, we were trading up here at around $60. And so I bought it earlier here today with a stop loss down here below this low of around $39, and an upside price target up here closer to $55 or $56. If you need the specific details on that trade, as I mentioned before, check the Telegram app if you're a premium member of Market Scholars. All right, so that's what I had for you here today. Thanks for checking out the video. Of course, this is Thanksgiving week, so always want to give you our appreciation for checking out these videos and for attending David and I's classes so diligently throughout time. We hope that we've educated you along the way and given you a few extra things to think about in terms of how to more successfully manage your own portfolios. Remember, if you are not currently a premium member of Market Scholars and you want to check that out, make sure you take advantage of our Black Friday sale by using that coupon code Black Friday when you're checking out here later on this week. So until next time, I want to wish you all the best of success with your trades and your investments. Happy Thanksgiving, and we'll see you all next week. Take care, everybody. Bye-bye.